And welcome. So, have you ever found yourself wondering, should I be a trader making those quick daily moves, or am I more of an investor, in it for the long haul? It's a huge question, right? Well, today we're going to unpack that by telling you a story about two friends. And trust me, there's a hidden twist in their story that most people completely miss. Let's get into it. All right, before we jump in, just a quick heads up. Everything we're talking about today is purely for learning and educational purposes. This isn't financial advice. It's always a smart move to chat with your own financial advisor to figure out what's best for you, okay? Let's go. As we go through this, I want you to think about something. Based on what you hear, which person do you connect with more? Are you a Pradesh or are you an Ashok? Just keep that question in mind.
So, let's meet our two friends. First up, we've got Pradesh. Pradesh is all about the action, the daily hustle. He's in the market, making moves, trying to catch every opportunity. His whole philosophy is money should be made now. And then there's Ashok. Ashok is the complete opposite. He's calm, he's patient, and he truly believes that real, lasting wealth is built slowly, over time.
And, as you can probably guess, they don't exactly see eye to eye on this stuff. Pradesh looks at Ashok and thinks, man, you're moving way too slow. You're missing out. Meanwhile, Ashok looks at Pradesh's constant trading and just sees a whole lot of unnecessary risk. They both think their way is the right way.
But what if there's something they're both missing? A really important detail that could totally change how we look at their strategies.
And that's the real twist, the one that almost nobody talks about enough. It's taxes. I know, it doesn't sound very exciting, but I promise you, this is where the entire game can change.
So, just think of taxes like this invisible force. It's the thing that decides whether the profits you work so hard for actually stay with you and grow, or if a big chunk of them just silently vanishes. So, how does this actually work in the real world? Let's break it down. And we'll start by taking a peek into Pradesh the trader's world. Okay, this is really important. Because Pradesh is trading so frequently, like intraday, his profits aren't seen as investment gains. Nope, they're treated as business income. That means all his trading profits get piled right on top of his regular salary, and he gets taxed at his personal income slab rate, which could be anywhere from 5% to a whopping 30%.
And believe it or not, it doesn't even stop there. That 30% is just the tax. On top of that, every single trade he makes gets hit with all these little fees: brokerage, transaction taxes, exchange charges, you name it. It's like death by 1,000 cuts for his profits.
So, that's the reality for Pradesh, our trader. It's pretty complex. Now let's switch gears and see how things look for Ashok, our investor. It's a very different story. For Ashok, things are so much simpler. It really all comes down to one thing: how long he holds on to his investments. If he sells in under a year, his gains are taxed at 20%. But if he just holds on for more than 12 months, the game changes. That's when the tax rate plummets to just 12.5% on any gains over 1.25 lakh rupees.
Just look at that number, 12.5%. Now compare that to the 30% that Pradesh might be paying. That's less than half. It's a massive difference in how much money actually ends up in your pocket.
Okay, so after seeing all that, what's the real lesson here? What's the secret we can learn from the story of Pradesh and Ashok? It really boils down to this simple shift in focus. Trading, at its core, is a game of how often you can make money. But investing is a game of how much of that money you actually get to keep. It's about being efficient with your wealth, not just being active.
See, in the end, the market doesn't just reward being fast, and it doesn't just reward being patient. What it truly rewards is discipline. It rewards understanding the rules of the game, managing your risk, and crucially, being aware of what happens to your money after you've made the profit. So if you take away just one single thing from our little story today, please let it be this: it's not about how fast you make it, or even how long you hold it. The real question, the one that truly matters, is how much do you actually get to keep? So now it's back to you. Are you a Pradesh, an Ashok, or maybe a little bit of both? If you're ready to figure out your own personalized path to wealth, we'd love to help. You can reach out to us by email or just give us a call for some guidance. Or for a super simple one-on-one guide, just drop your email address in the comments below.
And one last time, just a friendly reminder that all of this was for educational purposes only. Thanks so much for hanging out today, and we'll see you in the next one.